Hey everybody, Glenn Tompkins and welcome to our YouTube video. This just in, the market is going down, big sell-off today. Okay, so I know. So what does this mean? Well, if you're a VectorVest subscriber or you follow us here on YouTube, you're okay. I'm going to show you how you should not be worried about what's going on in the market right now. And if you want to know why, you sit right there. Hey everybody, Glenn Tompkins, Senior Instructor here at VectorVest. Always love bringing these videos to your attention, all right? As I mentioned, this just in, market's down. What do? Well, as a subscriber to the VectorVest software or as a subscriber to the YouTube channel here, you shouldn't be worried, and I'm going to talk to you why. If you're brand new to the VectorVest channel, by all means, hit that subscribe button. And if you like the content, hit the like button. Don't forget to hit the bell icon to be alerted to when new videos like this come out. So let's talk about what's going on in the market today. Big sell-off. Why? Because we have inflation fears. We have interest rate hike fears. You know something? I think it should, to a certain degree, be built into the market because it's not anything that nobody knows about. We know that the Fed is going to raise rates because inflation is running hot. Because inflation is running hot, the market is rocking and rolling, and the only way to rein it back in is to raise interest rates. So there's talk about there how many times the interest rates are going to be raised, but guess what? Even if they get raised 3, 4, 5 times, we're still going to be at historical low rates. So keep that in mind as you go through the picture of what's going on. So let's get right into the VectorVest software. This is where it all starts. We time the market. And for those of you out there saying you can't time the market, yes, we can. Now, from a market timing perspective, we're not talking about prognosticating where the market is going to go. We follow the trend of the market, and we keep our subscribers and followers on our YouTube channel on the right side of the trend of the market. Now, a lot of people say, well, when there's blood in the streets, you got to go buy stocks. I'm going to talk about that when we look at this market timing graph. What we're looking at here is the movement of over 9,000 stocks that we track in the VectorVest database. Why is that so important? Well, we put all of our money and our ideas on the S&P 500. And that's a great thing. I'm not downplaying that at all. But it only tracks 500 of some of the best stocks, and people use it as a barometer of how well their portfolios are doing. But folks, it's 500 stocks. The Dow, 30 stocks. But we put our stock into that. Well, is the Dow moving up? If it is, we got to go buy stocks. All right. But 9,000 stocks give you a more well-rounded view of the overall market, and we use it for market timing. And as you look at this graph, we use it as a trend indicator to keep our subscribers on the right side of the trend. So looking at a 6-month graph, no moving averages, but I do have support and resistance, and I'm going to use those for the perspective of keeping you on the right side of the market. From the most recent high on the VectorVest composite of $71.28, remember, the VectorVest composite is an indexed arithmetic average of all of the stocks that we track. And again, we track over 9,000 stocks. From that high, look at the pullback. Big pullback in the market. Everybody says, man, the blood in the streets, we got to go buy stocks. Okay, fine. The market reacted. Bounced off a level of support sitting at $65.36. Rose, and guess what? Got to a level of resistance sitting at the value of $68.58. What did it do? It pulled back. Market pulled back hard. Blood in the streets, got to go buy stocks. Bounced off a level of support at 65.36. Ran up. Where did it stop? Right at that level of resistance again of 68.58. Leveled off a little bit, sold off, big sell-off, found another level of support sitting at the value of 64.60. What did it do? It rebounded and went back up. And what did it do again? It fell for the last 3 days. We are falling again. And guess what? We broke through another level of support sitting at the value of 64.60. So now That's just looking at price action on the VectorVest composite, looking at what the market feels and how it reacts in regards to buying and selling of stocks. Now, with today's activity, a big red candle, big down day. Doesn't that mean that we're going to have a rebound tomorrow because there's blood in the streets and stocks are low? Possibly. But you notice each and every time that the market does respond and move higher, look at this. Boom. Hit that level, lower high, lower high. What do you expect is going to happen? This is looking at the trend. Now, if the market does respond and move higher tomorrow, it's got two levels of resistance to get through. It's got a level of resistance at 64.60, now a level of 65.36, before it can try to break through this level of 68.58. What do we need for the market to move higher? Some kind of catalyst to the upside. Where is that catalyst coming from right now? Well, we know petroleum stocks are moving, right? They sure are. But how long can they keep moving if the trend of the market is trending lower? Now, the other side of the equation is we are still in a bull market by way of VectorVest. Why? Because the S&P 500's earnings are still rising. Our earnings trend indicator is still rising. So we're still in a bull market. What's going to be the catalyst to bring us over into a bona fide bear market when earnings start missing on companies? We're still early in the earnings phase for 2022. A couple of banks, a bank missed revenue but beat earnings. That's going to be the catalyst before we get into a level of correction or recession. And a lot of people are giving a lot of talk about either one of those things happening because interest rates will start rising in about the March timeframe. So in quarter one of 2022, interest rates should start to rise. But even if they do, we're still at historical low rates on interest. So we're going to see how that's going to all work out. But I think it's the mentality, it's the emotion that people will be like, oh my gosh, the world is coming to an end and the market's going to correct. And you know something? It may. Are we going to hit recession? We may. But the catalyst to make that all happen is when earnings starts to miss. And again, we're still early in the earnings phase. Now, why you shouldn't be worried? Because VectorVest had our subscribers, our most conservative subscribers, out of the market way early before this happened. So I'm going to put on what we call our confirmed calls. You'll see arrows pop up on our graph. Red arrows denote a downtrend in the market or a down call in the market. Now notice this. On the date of 11/22 of 2021, the VectorVest system gave a down call for the most conservative investor in the market. And even when the market rebounded and wasn't able to take out this level of resistance, we still maintained that down call. Rebounded, wasn't able to take out that level of resistance, we maintained that down call. And even right now, if we rebound, what we're looking for in order to say that the market has legs to the upside from a more conservative standpoint is to see if we can break through this level of resistance. And folks, from a trend following perspective, folks, this VectorVest composite is doing an outstanding job so that you're not worried. All right. So right now, you're not a subscriber to the VectorVest software. What does that mean for you? Well, if you're not out of stocks right now because you feel that the potential for stocks to go up because they're so beaten up is high, all right, that's up to you to make that call. But you know something? On these pullbacks, you need to have some stops in place to take profits on the stocks that you have, to not let stocks become big losers. Wait a minute. My stocks keep rebounding. Look at this. If you would have told me to get out now, I would have missed this rebound. All right, fine. You didn't get out. And now look where you are now. You're even lower than this point back here where the market went down. At some point in time, folks, you have to determine when enough is enough. And if you're a longer term investor and you think that this is just going to, pass by, all right, you may be right. You may be wrong. You may be crazy, but it just may be a lunatic you're looking for. I don't know. All I'm telling you is that from the perspective of trying to make money in the market, you need to capitalize on your opportunities to capture profits when you can. These short-term moves to the upside could present good short-term opportunities. Then you have this level of resistance. Get out. and then wait. Wow, we're bouncing off support. Look at this level. We're bouncing off support. Get in. We're at a level of resistance. Get out. We're bouncing off a level of support. Look at this, even shorter term right here before it pulled back down. Folks, all I'm telling you is you don't need to be worried. Why? Because the VectorVest system or whatever tools you're using should be able to tell you when it's time to get back in. Now, let's talk about our indicators, even on these rebounds. I've got 3 indicators on this graph right here. RT, which looks at the short-term price trend of the market. We have the MTI, which looks at the underlying trend of the market, and we have the buy to sell ratio, which looks at the overall health of the market. That's right, folks. We have an indicator that looks at the overall health of the market, depending on how many stocks in the database have buy recommendations compared to sell recommendations. Notice again that on all of these rebounds, these indicators never gave you the okay that the market was ready to take off. Folks, that's why you don't need to be worried. If you're still in market or the stocks right now, you need to seriously consider waiting for the right opportunity to get back in. The blood is in the streets. The markets are falling. Big down day today, but with that down day, we did break through a level of support. What does that mean? The markets could still have more downside. Now watch this. I'm going to put this on a 1-year graph. Where could the market stop and give you another level of support? Right here, $62.65 on the VectorVest composite. Do we have more downside? Absolutely. And even after that, we've got another level at $59.55. Folks, it's here for you. It's in the software. It's designed to help you to make the right decisions at the right time. But notice from that high, the slowest, most conservative market timing call never gave you the okay to get back into the market. Short-term investors could have done so. Watch this. If you're a lot faster, aggressive trader, I've got a timing call for you, and it gives you a lot more calls. But look at this. Coming off of that little bounce, boom. Coming off of that little bounce from the upside, boom. It will give you more calls in and out. But the faster the timing signal, the more susceptible to whipsaws you will be. And if that is not your camp, then this is not the market timing call to use. Thus the reason, for the purpose of this video, I use the slowest, most conservative market timing call. Now, many of you will sit back and go, I don't think that this is right for me because it's just... That's fine. But I'm telling you that as a subscriber to the VectorVest software or as a subscriber to the YouTube VectorVest channel, it's okay. And you shouldn't be worried. We will let you know when it's the right time to be back into the market. So with that, folks, this video is over. The market is down today. I've shown you what to look for in the VectorVest software. If you're not a subscriber to the VectorVest software, 99 cents will give you access to everything that I just showed you right here to prepare you to get back into the market at the right time. You go to www.vectorvest.com/YT for YouTube to get that special 99-cent trial for 30 days. And you want to know when it's the right time to get in? We will get you so you don't have to worry. Folks, we do the work, you reap the rewards. So until the next time, folks, see ya.